Hello traders, Gary Wagner here, approximately 10:10 in Honolulu. It is Tuesday, the 8th day of November, and this is the daily report for gold and silver. We had gold trading firmer through the evening, actually touching to $1,800 per ounce before news from Italy coming out saying that their leading party, the Prime Minister, is in fact going to resign after a referendum is reached, an austerity vote, so to speak, in which they will come out with some guidelines for handling the debt. This took gold from being in the positive area of $3, $4, $5 higher, as I said, up to about $1,800 an ounce, and brought it down, trading down about $15 per ounce, currently off about $13, as you can see, at $17.82. That's basis cash, and that's just above the lows of today. When we take a look, the first chart that I do want to take a look at is our daily chart. This is a continuous contract, and what I am noticing right now is that certain benchmarks that I pegged for this marketplace to reach have in fact been hit at this point. And as you can see, we surpassed the first benchmark that I was really looking for. This was my second benchmark, and it is, oddly enough, currently where we are trading at. What does that mean? Well, in terms of straight fundamentals, I don't think that what we heard out of Italy really is a tremendous game changer, and here's why. Simply put, the UE, the European Union, does not have enough money to bail Italy out. At the same time, Italy's economy is nothing like the economy of Greece. In other words, it is a vibrant economy. It is a lot more robust. The GNP is a lot greater. It's a different ballgame. They have been propping up the bonds, but those bonds are delivering 6+%. And the word on the street right now is there is simply not enough money within the Italian gross national product within their ability to pay it back at these rates. So, in my opinion, we are certainly not out of the woods yet or out of the water yet when it comes to the European Union crisis. Let's take a look at the silver market. Silver market has gone butt up against the resistance that I've been talking about, and I believe that this resistance is critical for it to move higher. Let's go ahead and blow that chart up for us. And I think that you can see that the one thing that we have been looking at, and that is with silver, you can see, and this is back at the end of October, it was able to sustain really a move up on this rally as it traded from $30 an ounce and came up. It really was able to go over and form this three-river evening star formation. There's that star right there in the center. But it was able to form that, but really never look back. The market then did trade lower, although on this occasion, as it came down, it formed a base, as you can see, right in this area, and this area just above this 31.56. It's a 76% retracement of this entire move from $44 as it came back down at the end of October, or excuse me, the end of September, to go to about $26. You can see that it found support there, but as it came back up here, there can be no doubt, and that is that we do have resistance currently in this area. This area to me is absolutely critical that it's able to take that out. So, traders that are currently in the silver market, you might want to consider pulling profits on part of your position. You might want to hold. But as I said, this to me is a critical area. We absolutely want to watch it very, very closely. As far as other markets that we try to follow on a daily basis, the dollar index, as you can see, is under pressure again with the euro dollar trading higher, especially on this news of a change in the Italian political structure. However, I don't really see that as being the answer. It might be part of the solution, but it's certainly only part way there. In other words, a change in command simply means that new ideas might come in, but there still needs to be a solution to the crisis that they're having there, and not just a changing of the guards. You do have the equities market, Standard & Poor's, trading higher this morning. When we take a look at the S&P 500, it has gone beyond and is now quickly approaching this top in which we saw it move to towards the end of October. So traders, what are we looking for as we go into the middle of this week and towards the end of this week? And I think that all eyes, of course, are going to be placed on Europe. We are continuing to see a lot of news coming out of the European Union. When we take a look on a technical basis, there is no doubt that the bullish sentiment is still in control. And here's something that I want to look at and want to consider. And that is, have we seen the worst of this correction? And if that's the case, are we going to go fully into an impulse phase, or do we have another major C wave down? And for that, what I really want to do is we really need to go back and take a look at the activity that we have seen in this marketplace over the last correction. And to do that, I really kind of have to shrink this down, and let me give you an idea of what I am talking about. And what I mean by that is, when we take a look at the end of 2010, December 2010, January and February of 2011, whereas we had originally anticipated a large major ABC correction, we really didn't see that. We got the series of tops, really a triple top within the marketplace. And when the marketplace came down in February, we basically saw the low of that market. That was in February of this year. The market came up and we had a very, very strong ABC, but I've been looking at that as a minor count, and that minor count all being part and parcel of a wave. And then we went into this impulse phase where we've had our 1, 2, 3, I believe we'll see a 4 and a 5, which will break us above 1800. And the question remains, is this low that we saw, this 1553, is this going to be the significant low of the market, or are we going to have a large major C wave down? Or is it possible that this ABC that we have seen, which ended at the end of September, is it possible that that is the low that we're going to see? I can't answer the question. I can only postulate the question itself. I can't answer it. But I can tell you this. What's going to be important is really how we see this next impulse wave work. In other words, if we simply get our 1, 2, 3, 4, and 5, and this 5 stays within the confines of going between 50 and 75% of this move that we saw, this ABC move that we saw, it is quite possible that we're still within that major ABC, this being B, and we might have a C. How could that C pan out? Well, it could have obviously be a truncated, which would mean that the low would be well above this 1533. It could be as low as maybe 1624. It could be a flat. A flat would take you down to 1533, or a standard, what is called a zigzag correction, would take us below. My sentiment right now, and realize that my sentiment is as a staunch bull within the marketplace, but my sentiment is that it's quite possible that we have in fact seen the lows that we're going to see through this year. We will see a rally as we go into the end of the year, and a continuation of this market moving back up towards 1800. The future is obviously not etched in stone. Many things can happen, and I can promise you one thing. Up or down, we are going to witness an exciting time within the gold market itself. within the precious metals markets itself. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow on Wednesday for another daily update and review. Bye-bye.